Hi, early birds. We'll be kicking off shortly. Just bear with me a minute or two and we'll get everything queued up. If you do have any questions, please feel free to use the chat and I will do my best to follow up and respond as you guys post those questions. So we got about 3 minutes to go before we kick off. If anyone does have any questions they want to ask before we get started, please feel free to post them in the Q&A here. And I would prefer if you guys use the Q&A. I will do my best to make sure any questions that get asked in the Q&A get answered. I will try and monitor the chat, but it's a lot harder for me to monitor the chat than the Q&A. So I'll do my best to look at the chat, but if you have a question that's important, please make sure to ask it in the Q&A. And just maybe someone, if you would be so kind to confirm in the chat that my audio is working okay, that would be greatly appreciated. Thank you, Dave. Awesome. And thank you, Melinda. Appreciate it. Get my video up here as well so you guys can see my smiling face. How's everyone doing today? So we got about just one more minute till we kick off. You know, one of the things that been taking this new executive course, one of the things they like to do is start the day off with something positive. So I'm going to share with you guys some good news. I just got a new dishwasher. It started with some bad news. The dishwasher broke down. New dishwasher is being delivered today, and it's Wi-Fi enabled. So a new toy for daddy. Woohoo! On that note, I'm going to get us queued up to go live on Facebook, and then we will kick off. Of course it doesn't. Okay. Go live and away we go. Woohoo! So thank you guys for joining me today. As I said, today's session is going to be on understanding source deductions, which can be a really scary and overwhelming thing for people to understand when they're brand new to owning a corporation. I will do my best to explain this in layman's terms. If you do, however, have questions along the way, those of you who are live with us on the presentation, please try and use the Q&A. I will do my best to answer all the questions in the Q&A. You can also use the chat, but I'm going to be looking at that only really near the end. So please use the Q&A functionality. If you're watching along live on Facebook, please feel free to post your questions into the chat. And I think one of my colleagues will be monitoring that and posting those here. If not, I will make sure to go in and look at the comments afterwards and answer all of your questions as best as I can. For those of you who don't know who we are, my name is Andrew Wall. I am the managing partner at CPA4IT Professional Corporation. We are an accounting firm here in Canada, specializing in small businesses and independent contractors since 1984. The firm was founded by my father, George Wall, who has been doing this for a long time. We have helped literally thousands, if not hundreds of thousands of independent contractors manage their corporate taxes and their source deductions. We are also one of the few ISO 9001 registered firms, which basically means we have a system of processes and procedures that are constantly improving and that are audited by an external third party to make sure we're doing what we say we're doing and constantly improving. Will we have access to the recording later? So we do have one question that's already come through. Yes, copies of this presentation will be available instantly on our Facebook page that you can go and watch the review anytime you want, and scroll through our feed and you'll see that we've done lots of these webinars and sessions. We do record them live onto Facebook so that you can go back and watch the recording if you have to bump out for another meeting or whatever the case might be. So without further ado, let's jump into understanding source deductions and payroll. So the big question is, what are they? Payroll source deductions are essentially the taxes that are withheld by the employer from the employee's paycheck and remitted to the CRA on their behalf. If you were ever a full-time employee anywhere, if someone pays you a salary of $100,000, you know they didn't actually give you $100,000. They maybe took 30,000 or so of that off and remitted that to the government. Now, when they remitted that to the government is completely dependent on the different thresholds that we have. Typically, you're going to pay your source deductions. We tell everyone to pay by the third day of the following month in which you have paid your employees. It could be the 3rd, the 10th, or the 15th, and we'll talk about what those different deadlines are. But for all of our clients, we're telling you to pay by the 3rd of the 3rd day of the following month. And since the last day that you can pay source deductions in the calendar year is the last day that you can pay salary in the current year is December 31st, the source deductions are going to be due by the 3rd of January. This is why we're putting together these sessions now, because if anyone needs to declare salary for the 2020 year and they haven't done so already, they need to make a remittance and pay it to the CRA before January 3rd. The penalties for this can be quite extensive. Now, most employees are probably used to having money taken off a weekly or biweekly paycheck and then given to the government on a monthly or bi-monthly basis. It's done a little bit different for our clients because most of them are owner managers of their business, and the money that they take out throughout the course of the year is actually a loan that they're taking from the corporation, which they do pay interest on. And at the end of the year, we look at the balance of that loan to declare how much of that is going to be salary. So there's a number of questions for figuring out whether indeed you need to make a payroll source deduction remittance for the 2020 year end. So if you are brand new to this and this is the first time that you've set up a corporation, the first question you want to ask yourself is, do I have any income from any other sources? Like, wasn't I an employee for the first 3, 4, 5, 6 months of the year, and I have income from that full-time employment, or maybe from investments or a rental property or anything else? Because if you do have income from those other sources and they're above, the basic income threshold, which is you have a basic tax exemption that's at about $12,000. If it's below that, you're going to want to make sure you give yourself at least $12,000 because it's basically tax-free money. And if you have no income at all from other sources, you might want to go higher to, maybe the first tax bracket around 48, or maybe the next one around 97. A lot of that's going to be dependent on how much money you took out of your corporation. And we're going to talk a little bit more about that when we get to the form that we've sent and the email that we've sent all of our clients. So we will talk about that more, about how you figure out what that amount should be. But if you have income from other sources and it's more than 48,000, then you probably don't need to declare any additional income from your newly incorporated company. Now, if you are already incorporated, this is your second, third, fourth, or preceding year, then the other question is, have you already declared income from your corporation for the 2020 year end? One of the great advantages of owning a business is the ability to defer income. And a corporation has the ability to defer income for its directors up to 183 days from the year end of the corporation, which puts you squarely towards the end of the 6th month. So if you have a year end in July or onwards, let's say that you had a July 31st, 2019 year end, you could bonus out income 183 days, which would actually put that income into the month of January 2020. So you want to know if you declared any income from your corporation already for the 2020 year end. And that could be, like I said, anyone who has a July 31st, 2019 year end, all the way on to any of the 2020 year ends that we're preparing now, because you might have had, a January 2020 year end where you declared some income, but you might want to top that up. Maybe it was a slow year where you didn't take much money out of the corporation, things like COVID, all those things, lots of reasons why you might not have taken money out of the corporation. Maybe it wasn't there to take out. But now, the year's coming back, work's coming back, and you want to increase the salary that you had originally declared in that year, then you want to figure out, how much should I declare? And again, what we'll want to know is, how much money have you taken out of your corporation between your last fiscal year end and today, as well as how much you think you will take out, so that we can do some planning. And your account managers will work with you to figure out what that amount should be. But that's important for figuring out how much that you should declare. So again, other factors that I'm sorry about that, guys. There's a couple of other factors that you might want to consider, which is how much money that you want to contribute, or maybe have already contributed into your RRSPs. Because if you are planning to contribute money to your RRSPs, that contribution will reduce the taxable income that you have personally. And when we do our tax planning for you, we're trying to figure out where the target taxable income should be. And you might also have a target taxable income that you're shooting for. For example, we have many clients who are thinking of buying a home. And they haven't taken much money out of their corporation, and we could keep their personal income very, very low, they might actually want it to be a little bit higher, because they're planning to qualify for a mortgage. And, they're maybe talk to the mortgage broker, and the mortgage broker says, hey, I want to see 2 years of, income of $80,000, or whatever the case might be. So if that's the case, just make sure you let us know what you'd like that target income to be, so that we can make sure that the tax planning is as effective as possible. The other question that you might want to consider is whether you have any family members that you would like to do any income splitting with. And again, all of this is on the form that we've got, and we'll talk through that as we look at it. But this is important because income splitting is a great way to reduce the amount of total tax you pay, because of the fact that we have a marginal tax system, which means the higher your income, effectively the higher your tax that you're paying. Now, because it's a tax bracket system, you only pay the higher rate on what's in that new bracket. But if we have 2 people earning $50,000, they will pay less tax than one person who's earning $100,000. Now, income splitting with family members, there are now a bunch of rules about TOSI. We can't really use dividends. There are a few exceptions to that, but for most purposes, we can't use dividends for income splitting the way we used to. As well, but we can do income splitting through the use of salary, as long as the salary is reasonable for the work involved. Getting children involved with helping with websites, social media, bookkeeping, filing, all of that is legitimate things that we can pay our children salaries for, as long as they're, of a legal working age. You can't pay a toddler to do any filing, even if they are really precocious and smart. Doesn't mean that you can pay them. There are child labor laws that we have to worry about. But income splitting can be a great way of really minimizing the amount of personal tax that you pay. So make sure to include that in the form that you prepare. So what are the different remitter types and due dates? Because I mentioned earlier that there are different due dates, and knowing when to pay your source deductions is really important, because the penalties on a late source deduction are quite high, and we'll talk more about that in a second. But as you can see, I've got a lot of information pulled right off the CRA site, which basically tell you that the employee due dates are always a function of when the employee is paid. Again, for our clients, most of you are only deemed to have been paid during one day, which is for many of you December 31st. It could be up to 6 months from your year-end date. So some of you, if you have a year-end that's July 31st or onward, you might actually have two pay periods effectively. One 6 months after your year end, and then another one December 31st when we're topping you up. But you do need to make a remittance following the pay period in which you are deemed to have paid a salary to your directors. If that due date, which can be either the 3rd, the 10th, or the 15th, again, we'll talk about what yours is going to be, falls on either a Saturday, Sunday, or a public holiday, it's not actually going to be due until the next business day. This is the same fundamental rule for pretty much all tax deadlines. If your deadline does fall on a weekend or a holiday, you have until the next business day, which is always a big saving grace. If your business does happen to go bankrupt or stops operating, you are required to remit your source deductions within 7 days of the closure of your business. So if any of you are closing down your corporation and filing an article of dissolution, then you will need to do your source deductions and your remittance if you're declaring any salary 7 days after the closure of that business. So that's an important thing to note. It doesn't affect many of you on the call today, but it is important to be aware of if you are ever closing down your corporation. The last thing is figuring out what remitter type that you are and what your due dates are going to be. Now, first of all, the most important thing to understand about remitter types is they're based on the average monthly withholding amount from 2 calendar years ago. So that's a mouthful, right? What is the average monthly withholding amount? So that's basically just the withholding amount, the amount that you're going to be remitting to the government. And you take all of them over the year and then you divide them by 12. If you've only got one, then it's nice and easy. Your threshold is based off of the amount you had remitted. Now, it's not what you remitted this year. It's not even what you remitted last year. It's what you remitted 2 years ago. So if you are brand new, you are going to be a regular remitter for pretty much the next 2 years. So a regular remitter applies to all new corporations, as well as anyone with an average monthly withholding amount, again, from 2 years ago, of less than $25,000. And this means that if you are a regular remitter, your due date is the 15th of the following month in which you have paid your employees. So if you're paying your employee or deemed to have been paying your employee on December 31st, that remittance will be due by January the 15th. Now, if your average monthly withholding amount was greater than $25,000, but less than $99,999.99, it would be due on the 10th of the month. Okay. So again, if it was December 31st that the payment is deemed to have been paid, this would be then due by January the 10th. Lastly is the threshold, or well, not lastly, because there's quarterly remitters and associated corporations, but threshold twos is anyone who has an average monthly withholding amount of $100,000 or more. And that's going to be due by the 3rd. Now, this is the worst case scenario. This is the earliest that it could be due. And this is why we tell all of our clients and we set all of our deadlines. So all of the correspondence that you are going to see from us is going to tell you to pay by the 3rd of the following month. And this is just so that we've got an extra buffer. If you are running behind, something happens, we've got a few extra days, and we just don't want to get in that situation where we overpromise and underdeliver. We would rather underpromise and overdeliver. So we're going to make sure that you have plenty of time for your deadlines. As you can tell, we're doing this very early now in the first couple of weeks of November, which gives us plenty of time to get the planning together and make sure that you hit that deadline of January 3rd. Now, there's also something called a quarterly remitter. It's very rare that this applies to people because you have to have an average monthly withholding amount of less than $3,000, which most of our clients don't qualify for. But in that situation, if that were the case, then your remitter, you're only required to remit quarterly. But again, if you're only paying yourself once a year, paying yourself quarterly as opposed to monthly is no real advantage because you're still only paying yourself once a year. Now, the last thing to note is something around associated corporations. If you have multiple corporations owned by the same shareholder, then you have to actually combine the average monthly withholding of both corporations. Again, this doesn't affect too many of our corporations, but we do have a few clients out there who have multiple corporations and are paying employees from both of these corporations. In that case, you do have to combine them together to figure out what threshold that you are. Most of our clients are probably going to fall in a threshold 1. Now, what happens quite frequently and quite a bit around this time of year is you will get a letter saying, you are now a threshold 1. So after 2 years of being in business, you might get a notification you are now a threshold 1, or you are now a regular remitter, or you are now a threshold 2. It doesn't mean you have to do anything with that other than be aware that your deadline has now changed from maybe the 15th to the 10th or the 3rd, depending upon what threshold you are now. The most common one that our clients see is obviously when you become a threshold 1 or a regular remitter, effectively based on the, your previous 2 years of activity. So if you see that notification, if you get that letter from CRA, it's nothing to be concerned about, and there's no action required on that other than to make sure that you're hitting your deadline. But if you're hitting your deadlines and paying your remittances by the dates we tell you, there's absolutely nothing to worry about. Now, new remitters, which are people who are brand new to being incorporated. First of all, if you're a new employer, you need to apply for a business number so that you can make a payroll remittance. Sorry, I should say not a business number, a payroll account number. So you will have a business number, but normally when we incorporate you, we are not going to set you up with a payroll account number right away because you may not need to make payroll remittances in that very first year. And once a payroll account number is created, the CRA will expect to receive payroll remittances. So if we create that account and you aren't planning to make any payments in this first year, then CRA is going to be going, hey, where's my payment? Hey, where's my payment? Hey, where's my payment? It's going to create a lot of confusion for you, maybe some extra work, and just unnecessary workload. So we eliminate that by only creating it when we actually do make our first payroll remittance. These can be created very easily by simply calling and making a call to the CRA and say, hey, I'd like to create a payroll number. Here's my business number, and it's created. You can also do it online. Pretty much everything can be done online very quickly and very easily. Now, all new employers will be considered regular remitters for remitting frequencies for the first 2 years, as we said, because the thresholds are determined by your average monthly withholding amounts from 2 years ago. So you're going to be a regular remitter for the first 2 years, no matter how much your remittance amount is. But again, we're going to tell you to pay by the 3rd, and I do encourage you to pay by that date. Now, CRA will send you a remittance form in the mail. You will usually get these regularly. These are really important if you wish to make a payment in person at the bank. Again, if you're the type of person who likes to go into the bank to make a payroll remittance and you know you're going to do a payroll remittance this year and this is your very first year of operation, you should probably get on the phone to CRA after this webinar and set up your payroll account number, because you need some time for that physical piece of paper to be shipped to you, because you cannot walk into a bank and make a payment without that form. It's called a PD7A form. We can't give it to you. The only place you can get it is from CRA, and they will need to mail it to you. Now, the good news is there's lots of ways to make payments other than in your bank, and we will be talking about those in a second. Oh, no, I've got the wrong slide. I thought I had updated this. This is an old slide. Oh, I do have the right slide. I just forgot to delete the old slide. Bear with me a second, everybody. I appreciate it. So things have changed a lot in the last few years. There's now lots of, well, maybe not lots, one new payment option that's available to you, and that's paying by credit card, which is a nice new benefit. There are some additional costs to be able to do that. There's a couple of different options. I will post up this PowerPoint deck so people can download it. And all these links are clickable to the CRA site to find the instructions and links for how to pay through your online banking, which is usually how I do recommend you make your payment, is through the online banking account. You can make it through the CRA My Payment under your corporate account. That is, though, effectively like Interac and will be limited to whatever your Interac maximum amount is, which is usually about $3,000. Whereas I know with my personal online banking, I don't have that limit, and I can make payments, which obviously for source deductions are usually quite large. It's the largest tax that you will be paying. So I like to do it through my online banking rather than through My Payment. You can also do pre-authorized debit. There's some forms and links to do if you want to do a future dated payment for that. You can also pay by credit card, as I said. There's a couple of different options. Plastique is the first one who ever offered that, but there are additional costs to be able to do that. You can't just put it on your regular, you can't go to like CRA and pay them. You have to go through one of these third-party providers, and there is a cost. Service charge, I think, is about 3% to do that. And that's using a service provider. So there's a couple of third-party service providers that allow you to pay by credit card. And of course, you can pay with a Canadian bank account using a wire transfer, or by check, or in person. And in person can be done either at a financial institution if you have the PD7A, or at a Canada Post outlet. Again, you need that PD7A form in order to do that. So these remittance forms, as I said earlier, they are personalized to you, and you'll have to complete the remittance voucher, the bottom part of the remittance form that you will give to the people. They will then stamp the top part to show that your payment has been made, and give that back to you. But the bottom part does need to be completed. When we do your source deduction planning for you, we will tell you all the critical pieces of information that you're going to need to put on this form. And it's the same information that you will need if you're making an online payment, which is, what is the gross payroll amount? Like, how much are you paying in total salary? What is the remittance amount? So how much are you actually remitting and paying to the government right now? And how many employees are there eligible in this period? And what period are you paying it for? The thing that people get wrong most often is the pay period. They'll put their year-end date as opposed to the pay period. The pay period, for anyone that we're doing tax planning for now, is going to be December. So they ask you for the month. They're not going to ask you for the day. They're asking you for the pay period. So you're just going to say December. If you're, let's say that you had a January year-end and we were doing something 6 months out from then it would be July. Right? So it's going to be a function of that. But again, we'll provide all that information to you, but you do need to complete that PD7A form and remit that to the government, or provide that to the bank or the post office if you're paying at either of those locations. Again, I don't recommend that. Obviously with COVID, there's no need to go out and be in public unnecessarily. You can do all of this through your online bank account, which is the number one way that we do recommend you make a payment. Now, if you are not making a remittance for any reason, and you have made a remittance in the past. Now, if you haven't made a remittance in the past, you're effectively not on CRA's radar. But if you're not making a remittance and you have made remittances in the past, CRA is expecting you to make a remittance. And if you're not, you need to tell them that you're not. And that can be done either online, over the phone, or by mail. And basically all you're going to do is complete that same PD7A form and just say, I have no employees with any eligible remittances during this period. That is important to do. Otherwise, you're going to get a whole bunch of mail and communication now saying you're late. They may do arbitrary assessments, et cetera, et cetera. So pretty easy and straightforward to do. If you're not familiar with this or confused by this at all, speak with your account manager and they'll help walk you through it. It's a really, really straightforward process. Now, what do you do if you need to correct any payroll remitting errors? So let's say that you've under remitted, you haven't made enough of a payment, or the payment has been applied to the wrong period, or you have over remitted. A couple of different options available. So generally speaking, with an under remittance or an over remittance, usually what we do is we just assume that payment is going to be rectified on the personal taxes because you are the owner of the business. It's sort of left pocket, right pocket. I'm in a meeting right now. I apologize for that. We got a delivery or something. I think that might be my new dishwasher. But if you have under remitted, as long as you have paid enough to cover the CPP, both the employer and the employers and the employee side, what we will do is just adjust the taxes that have been withheld on the T4. Now, an employee is allowed to tell their employer not to withhold their tax. Now, the employer must withhold any CPP and any EI if that's applicable. Most EI is not applicable to any arm's length people. So you, your spouse, your family members, you don't need to pay EI on, but the CPP must be withheld and be remitted. And if you don't, there is a penalty for that. But the employee is allowed to tell the employer not to withhold all of the tax or a portion of the tax because they might have like RSP contributions that would offset any of the taxes that are normally being withheld. And so what we do, if you've made an under remittance, we'll just reduce the amount of tax withheld on the T4. And now, because the amount of tax withheld is not sufficient to cover the salary that has been declared, the employee will have some additional tax to pay when they file their personal tax return. And it's the same thing with an over remittance. If you've remitted too much, again, we're just going to adjust the tax on the T4 and you will get a refund when you file your personal tax return. Now, if there's a misapplied payment, which does happen sometimes, we will just have to call CRA and tell them to apply it to the appropriate period. This happens oftentimes when people make payroll remittances and use the wrong remitting period, like their year end, instead of the say December is the month end or the remitting period that we're choosing. It's usually a straightforward fix. And the penalties, if they do apply any penalties, as soon as that's reapplied to the right category, they'll be overridden, assuming that the payment was indeed made on time. So pretty easy and pretty straightforward to correct those. If you are having any troubles with that, again, speak to your account manager. They'll be happy to sort those out for you. But it is really important to get these remittances in on time because the penalty for a late source deduction amount is very, very high. It's one of the highest penalties of any tax in Canada. It's 10% the minute you're late. And then plus interest as well. But it's 10% whether you're an hour late, a minute late, a day late, a month late, it's 10%. And in addition, if you fail to make payments on time more than once, CRA could apply a 20% penalty for the second or later failures. So if you've missed that deadline more than once, it could be not only a 10% penalty, it could be a 20% penalty. And as you can imagine, because the amounts on payroll remittance, which is effectively personal tax and CPP, the penalties can be very, very high. So it's really important to make those on time. And I can see we've got a couple of questions that have come through. So bear with me and I'm going to take a look at those. So first question I have is is any money transferred from my business checking account to my personal checking account considered part of your salary? So it is going to be considered part of your director's advance, and those director's advance do need to be covered off by either a salary or a dividend. We generally speaking have a couple of tricks up our sleeve, but if you're taking money out of your corporate account and putting it into your personal checking account, that is most likely going to be considered salary. Don't do that. Only take money out of your corporation as you need it. Don't just put it into a personal checking account and leave it there as a savings account. The purpose of a corporation is a separate legal entity in which you are going to store and save money. So do not take money out of your personal account or your corporate account and put it into your checking account and leave it sitting there. You only take money out of your corporation as you need it. Okay. What about money I recently moved to my personal checking account to make installment payment on personal taxes for 2020? Same thing. Any money coming out of your corporation is going to increase your director's advance. And the director's advance are going to be basically what we consider your salary. Just like when you were an employee somewhere, your salary was deemed to be 100,000, even though you didn't get to keep that full 100, your salary was considered 100. So you're effectively paying tax on the tax. It's not really double taxation, but your salary includes the amount that the employer has withheld from you. Okay. So any money, including money you're taking out to make an RSP contributions, to pay personal tax installments, that's going to be considered a director's advance. And then when we sit down to do your tax planning, that's what we're going to take into account when we're figuring out what your salary or dividend should be. So we've got a couple more coming through here. So in case of any director's advance, do the remittances have to be made the end of the month in which I took out the money or at the end of the year? So if you are taking out the same amount every single month, there is a high probability that CRA would consider that to be a salary. However, if you're taking out money in drips and drabs as you need it, we have been successful in calling that a loan. As long as we declare and record interest on that loan, then that itself is not the salary. We deem the salary with a strike of a pen, and that's typically done now at the year end. So again, you want to avoid taking out the same amount of money on a regular basis. You want to take out money as you need it. So first of all, you should be paying for all of your business expenses through, I'm in a meeting, my dear. I apologize for that. It's clearly the delivery guy. As I was saying, you want to be taking out money as you need it, paying for all of your deductible business expenses from inside the corporation through a corporate bank account or a corporate credit card. And then you're only taking out money that you need for the non-deductible portion of your life. Hopefully that answers your question. I think there was one more question in here on the chat. I think, let me see. What happens if gross amount was incorrect, but remittance was correct during monthly remittance? Does this have any problem? No, generally speaking, not. It's usually not an issue. There doesn't seem to be any correlation between the PD7A forms or the online forms. What CRA ultimately cares about is what is the total remittance amount made, and then what are the T4s. They reconcile the amount paid with the T4s. So that seems to be the critical part. So hopefully that answers your questions. And believe it or not, that brings us to the end of the slide. It looks like we do have one more question that's come up here. Are PDOC calculations correct, or do you use some? I don't know what PDOC stands for, or do you use a different calculator? So the CRA does have an online calculator that you can use. That is accurate. There's a number of calculators out there. We have our own calculator that we do use, but there is a CRA one that you can use. And one other thing I did want to do before we wrap up was I wanted to take a look at the email that many of you would have received from us recently, which is just a reminder. So it's a reminder that source deductions are coming. You can tell us if you're doing the tax planning on your own and you don't need our assistance with that, and that will stop all future reminders. If you've already done the tax planning with CPA 4IT and don't want to do any additional tax planning, then you click this button and you won't receive any more notifications. And of course, if you are sending us a manual worksheet as opposed to completing our web form, and we would prefer you to complete the web form, then you can click this after you've sent that. And again, that will stop the reminders. If you don't click any of these, nor go into the tax planning worksheet and complete this, you will continue to get reminders on a weekly basis until we have completed your tax planning. So what I would like you guys to do is go ahead and complete this tax planning calculation form. That's going to take you to this form right here. This is a really important form for us because it gives your account managers the information that they need in order to assist you with the tax planning. So we have your company name, your email address, whether you would like us to prepare the T4s for you or T5s, or whether you're going to be preparing those yourself. It's helpful for us to know how much your business did earn since your last fiscal year end, and try to project that out towards the end of the calendar year if you can. Again, also, how much did you spend on business related expenses that were paid personally? This is the key line here, or through a personal credit card. This is important because we know this is going to count as a credit towards your director's advance and reduce the amount of salary or dividend that we're going to need to declare for you. We do also ask you to tell us how much you paid for through the corporation as well, just so that we can get a good feel for what the net income of the corporation is going to be, because any salary we declare for you is going to be an expense to the corporation. And if there's no net income of the corporation, we may not want to declare as much salary for you. Of course, if you are got a net income of over $500,000, we might want to declare more to bring you below the small business deduction threshold. That's a story for another time. We want to also know if you've made any money from outside of your business. If you have any investments, if you have a rental property, if you were an employee for part of the year, we want to know how much you earn so that we can figure out what is going to be the ideal salary for you. You also want to know how much money that you have already paid towards your 2020, not 20,209 payroll taxes. But if you've already made any remittances, that's helpful for us to know. So we're not telling you to pay twice as much as you should because you've already made a big remittance. Of course, we also want to know if you've taken out any money for the purchase of a home or a car. There's a couple of strategies that are available to corporations, a home loan or an auto loan. If you have taken out money for the purchase of a car or a home, please include that amount here. Do also include it in the amount that you took out of your business, but we'll do that calculation and remove that amount when we're calculating the director's advance. And that won't have to become income. I won't get into that again now. That's a story for another day as well. We're then going to ask you for your some basic information, your name, your date of birth, the RSP contribution limit, as well as how many contributions you have made or will be making before the end of the year. Again, really helpful for the tax planning. Other personal income from outside the corporation, other deductions that you might have as far as childcare expenses or rental losses or things like that. Again, this is helping us to figure out where your net income is going to be before we declare anything from the corporate tax, so we can do effective tax planning. And we ask for some similar type of information about your spouse in case we are planning to do any income splitting with them. And then lastly, we also want to know if you have any children. Second to last is we want to know if you have any children who are over 18. Generally speaking, because of labor laws, we're not doing income splitting to children who are under 18. Some exceptions to children who are under 16, but usually we prefer them to be over 18 for income splitting purposes. And you can put your names and date of birth of your children in there. And then lastly, we do ask you for some sole proprietorship income. A lot of clients move from sole prop to Inc. So we want to know if you had a sole proprietorship. Now I'm going to move over. I do see the number of questions coming through over here. I'll get to those questions and then we'll wrap up. So PDO saving collections are correct. Do you use some? Okay, I think I answered that one already. Instead, I didn't know what. And that PDOC is the CRA's online calculator. Yes, that is accurate. And it's a great calculator. Feel free to use that one if you like. is there a rule of thumb for calculating gross revenue for the worksheet? I mean, you just basically, if you don't know what it's going to be, you probably want to look at what your gross revenue has been from the end of your fiscal year till now, and then just divide that by however many months that's been, and then multiply that by the additional months remaining to add the additional thing, and just sort of get a monthly sort of amount. If you use the CRA's payroll deductions online, oh, I see, I get it now. Payroll deductions online calculator, PDOC, for payroll deductions each month, but you take out a different amount from your business checking account each month. Are there any concerns about that? No, because the CRA's payroll deductions online calculator can be done without logging into CRA, so it's not tied. That doesn't mean anything. Now, if you fill in a a PD7A and you do the wrong remittance amount and don't remit the amount that you said on that form, you're going to run into a problem. I would think that would be identified at the bank or the post office, so probably unlikely to happen. And then online, obviously, the only thing you can get wrong is, like I said, you can get the pay period wrong, you can get the number of employees wrong, you can get the gross payroll amount wrong. Getting the gross payroll and the employee rate wrong, we have seen people get that wrong. It has never really seemed to have triggered any unnecessary attention. What does tend to cause problems is when you get the pay period wrong. And would you want to know about 2020 CERB and CRB benefits? Yes, we would, because that's other income that we do need to take into account. And we'll particularly, those are really, really important to know and be aware of, because we want to be careful not to put you at jeopardy for getting any of that clawed back. So that is really important to know. Okay. Got a couple of questions in the chats here. What happens if gross amount? I think I've covered that one. Can you go through the worksheet briefly? Are these figures gross revenue available in our QuickBooks report? Is this something you have already? Yes, it would be available in your QuickBooks report already. If we are doing your bookkeeping for you, we can grab that for you. But the majority of our clients are doing their own bookkeeping, and we don't have that information. And if you are doing your own bookkeeping, and if you're not on one of our fixed fee payment plans, it's really important to put it in. We can maybe go find it in your online account, but it's going to be an additional charging cost for that. I think I've covered everything. Great. If there's no other questions, we'll call it a day here. I do also want to let you know that we are putting on another one of these webinars. So if something comes up after this session and you think of it, feel free to come to the next session and ask your question there. Or of course, join our Facebook group and feel free to post in there. It's called facebook.com/groups/the self-employed support network. Glad I could help, Andrew. I hope that this session was useful for everyone. And I look forward to seeing your worksheets and helping you figure out what salaries we should be declaring for the year. And like I said, I hope this answered all your questions. If not, please do let us know. And I guess that's a wrap for today. Thank you, everybody, and bye for now.